I don't think it's going to be a damn squid. BlackRock will be utterly hated for you lost me all this money. We've all been around this cycle for a long time. We know how it works. It's not the institutions, it's us lot. Okay, ETH next. Let's pile our money into ETH. And that's what's going on. And that will go. I mean, I think last time I came on the show, I said this is the next big trade, amongst the majors is this switch. And if I look at the chart pattern, it's this giant wedge over a period of time. In fact, we showed it on the show last time. This giant wedge pattern in the ETH Bitcoin cross on the monthly chart. ETH is the new shiny thing. Bitcoin and Solana lag for a bit. Yeah, so what happens is when you issue debt, you've got a fixed interest rate that you now pay, right?
Yes.
So 4 years ago, this is all done at nearly zero. It depends on time horizon, right? Let's not worry about what happens in the first, week, 2 weeks, 3 weeks. But over time, I think of this as two different ways. Those of us who've been in this space for a long time, it's like our IPO. We were seed investors in Bitcoin or Series A investors, Series B, Series C, and then eventually we get the IPO. So, but, like the IPOs of the 90s, I think it usually does, they do pretty well, which is we'll see a lot of follow through. So I'm expecting, the same as everybody else, the kind of $50 billion over the course of the year. But there is no insanity like crypto insanity. As you know, Ran, is when things start happening, people they lose their minds with FOMO and everything else. So there is no real precedent for a 70-volt asset that's in a roaring bull market coming to be available to every single person who owns a brokerage in the United States. So anything could happen. It could be a wild-ass bubble. I don't think it's going to be a damn squid. Look, they're all correlated anyway. They always were. They were correlated by the macro business cycle. They always have been. So they are correlated assets. But the rebellious aspect of building a new financial system, you can either take it as, well, Gary's won and we kind of put it inside Wall Street's walls, or we put the Trojan horse inside of Wall Street. I'll go with the latter. People see they've got higher fees in this than traditional products. And it's a product that really appeals to people because it has a very different risk reward profile. And particularly by launching it in the middle of a Bitcoin halving year, the macro crypto spring to summer, the probability of attracting quite a lot of assets is huge. That I'm sure they haven't thought about how they're going to deal with a crypto bear market when everybody hates you. But, Cathie Wood's just gone through and that she managed to get through alive. BlackRock will be utterly hated for you lost me all this money. We've all been around this cycle for a long time. We know how it works. It's not the institutions, it's us lot. We're the people front running it. So we're going, okay, ETH next. Let's pile our money into ETH. And that's what's going on. And that will go. I mean, I think last time I came on the show, I said this is the next big trade, amongst the majors is this switch. And if I look at the chart pattern, it's this giant wedge over a period of time. In fact, we showed it on the show last time. This giant wedge pattern in the Bitcoin cross on the monthly chart. Then, I use a lot of DMARC for my technical analysis. It gave daily, weekly, and very soon a monthly 9 count. Yeah, and if you make sure you join the lows and bottom, it's just basically touch the bottom trend line. Even the guys from Bloomberg who've been on top of all of this have said, listen, it's probably a 60-70% chance that will happen. Makes sense to me. Again, if you've got the two biggest assets, just think of Gary's mind, right? Gary Gensler. His mind is, let's get these behind Wall Street. Let's give Wall Street share of this. Let's get it into my jurisdiction. Then, of course, you want the second largest asset. The rest he'll probably leave to us for a while until we get a change of SEC or whatever. But he wants to make sure that they've kind of got the guardrails around the two big ones. So I think they want it.
Today, we delve into the profound insights of Raoul Pal, shedding light on the subtle yet impactful crisis of currency debasement gripping societies worldwide. But what does currency debasement mean for individuals like you and me? Essentially, it entails the gradual erosion of the value of money, resulting in higher living costs and diminished purchasing power. This isn't merely a theoretical concept, it's a stark reality affecting millions globally. Recent analysis by Matthew Penberg, as highlighted by CryptoNews, warns of a significant shift away from the US dollar, driven by geopolitical tensions and fiscal mismanagement. This looming volatility underscores the critical need to comprehend economic fundamentals and the external factors shaping our financial landscape. With currency values fluctuating unpredictably, the imperative for alternative investment strategies becomes ever more evident. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
In 2008, we didn't have the magic cowbell. We didn't have money printing. So interest rates are a slow, blunt tool. Money printing is instantaneous. So I think everybody was shocked by what happened at COVID. They shut the entire world for 3 months. The market went down for precisely 4 weeks and then rocketed going forwards. Why did it rocket? Because if you deflate the price by the amount the balance sheet went, it was just debasement of currency. I don't see how you can have 2008 once you've got the money printer. I don't see where the systemic problem is. We all understand how big the debt is, but we figured out, don't forget, households have been deleveraging now since 2008. Corporates access the bond market, and there's still a starvation for yield that comes out of the pension funds that supports it. And if we look at what the Federal Reserve are doing, they want to lower interest rates anyway. And they've been injecting liquidity into the system. I just have a faith that everything changed in 2008 and that most people don't understand this. And maybe I'm wrong. But 2008 was a watershed moment in the change of how things work. So what they're doing is mutualizing the payment of interest rates amongst the people by clipping the currency, essentially, by debasing the currency. So it's not pushing money into the system, giving us more money to spend. It's the optical thing, like the Venezuelan stock market. The currency devalues, the price goes up, right? Same with the Weimar Republic. When you look at the German stock market, it went up in a straight line. So that's what happens, but this is the global reserve currency. So there's a lot of bigger games at play here. And I think everybody in every single central bank is fully aware of the game that they're playing, which is we cannot allow the price of collateral to go bust, right? Because the collateral went bust in 2008, which is the housing market, and it brought everything down. Because we have very little collateral and lots of debt. And we've seen this in the crypto markets in 2022, right? We all live this. Not enough collateral, too much debt, the whole fucking thing blows up. It's my view that the central banks are fully aware of that. And so the way to avoid it is the management of the issuance of currency. As you say, it's not a good thing, but it's not fast enough to create the spiral. It's just a 15% debasement a year of currency, which makes our purchasing power actually very difficult. It's very different to inflation. Look, there's a probability that you could front-end load something crazy, and then in which case some of these riskier markets don't follow through the rest of the business cycle. I give that a 20% chance. I give a 60% chance that this is just a normal cycle that we know from crypto and macro. We tack on another 100% plus in the NASDAQ, and we tack on another 500% in crypto plus, broadly across the board. And there's the other thing, which is this is going to be a much bigger bubble into 2025 because kind of all the elements are in line. Now, I think there's a 20% chance of that. That could have a longer hangover for the next cycle, but I don't see the cycle has changed here. It's been like clockwork, based around the debt cycle. It's been managed the same way every single time. Interest rates go up, growth slows, the Fed or one of the other central banks stimulates, it kind of bottoms the cycle out. I think most assets priced in a recession last year in 2022. Crypto certainly did. The year-on-year rate of change of crypto and the NASDAQ were perfectly in line with our financial conditions index. Financial conditions index is loosening rapidly and everything follows.
As our discussion delves deeper, we confront the stark reality illuminated by Raoul Pal, the widening chasm between the asset-rich and those reliant on stagnant wages. This disparity is exacerbated by policies that inflate asset prices, posing increasing challenges for average individuals to amass wealth. The notion of an invisible tax, as articulated by J.P. Morgan, speaks to the insidious consequences of such policies, foretelling a harsh reckoning period due to prolonged stimulus measures. This paints a grim portrait of economic inequality, urging a proactive approach to personal finance in response. In the face of these challenges, comprehending the mechanics behind asset inflation and currency debasement is paramount. It's not merely about the numbers on a price tag, rather, it's about grasping the underlying forces propelling those changes. For instance, the surge in Bitcoin's value amid global market uncertainties underscores the quest for safe haven assets, as observed in recent market analyses. This pursuit of stability in an uncertain economic climate sheds light on the evolving paradigms and investment strategies. While grappling with the challenges posed by currency debasement and economic disparities may seem daunting, the emergence of digital currencies offers a ray of hope. Raoul Pal's optimistic outlook on the crypto market is well-founded. Digital assets present unprecedented opportunities for wealth accumulation that were inconceivable a mere decade ago. The inevitable shift toward a more digitized financial system underscores the importance of remaining informed and adaptable to navigate this transition successfully. Although today's economic landscape is rife with uncertainty, it also brims with opportunities for those who are open to learning and adapting. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.